These are the biggest lies that you need to be aware of as a first-time homebuyer buying a house in 2023. Over the last 2 years, we've seen homes appreciate nearly 40%, and then it came to a halt, and now homes are sitting on the market longer, interest rates have nearly doubled, and there's a lot of talk out there about a housing crash. So if you're a first-time homebuyer, someone looking to take advantage and actually buy a home, these are some things that you absolutely need to be aware of so that you can set yourself up for success while at the same time confirming that you're buying for the right reasons. The first lie that I want to talk about in today's video is that real estate can only go up in value. Over the last 65 years, homes have appreciated nearly 4.6%. So over the long haul, homes have gone up in value, but there are years where homes actually dip. In fact, this coming year of 2023, you might actually see home prices dip below where some people purchased their home in 2022. And understand, this is completely normal. Home price appreciation isn't a straight line up. As you can see from this graph here, there are years where home prices go up, and the next year they go down again, then they go back up. So even though the long-term trend for real estate is up, you have to make sure that you're buying for the right reasons and have that longer-term time horizon so that you protect yourself against any pullbacks in the market. Now, the second lie I want to talk about actually kind of goes along with the first, and that's that you have to buy at the bottom of the market in order to reap appreciation, in order to have success in owning real estate. And that's simply not true. What we're going to do is talk about an example of a property that I owned back in 2006. I purchased this home for $1.6 million. I ended up selling it for just under $1 million at the bottom of the market. So while I lost nearly $600,000 in equity in that property, if I had held on to that property until today, that home would be worth over $2 million. Now, I purchased that home back in 2006 at the very peak of the market. And while over the next couple of years after purchasing that home, property values plummeted, had I just held on to that property, I would have still reaped the rewards of that long-term appreciation. And that's why I mentioned earlier, having that longer-term time horizon allows you to withstand any bumps in the road. So as you can see from that example, it's not about buying at the bottom. In fact, there were people that purchased in 2020, coming out of a couple of years where the media was saying that home prices were going to crash because homes had appreciated so much since the last crash. And these people that purchased in 2020 gained nearly 40% equity over the last 2 years because they bought when it was the right time in their life and didn't worry about what the media was saying about the housing market. Now, before we dive into that third lie, I'd like to ask that you smash that like button if you're finding any value in this video at all. The third lie that often comes up with regards to buying real estate is that everyone should be a homeowner and that renting is just wasting money. The reality is everyone shouldn't be a homeowner. There are people out there that shouldn't own homes for one reason or another. If you're a person that likes to move around a lot, you don't like to be tied down, you like the flexibility of just being able to get up and move, then you probably shouldn't own real estate. And at the same time, should probably continue renting. At the same time, if you don't have money for a down payment or your credit score isn't great, then now might not be the time to buy a house. Just continue renting and working on these things until it's the right time in your life to make that move. Now, the fourth lie that we're going to talk about today is probably the most important in my opinion, and that's a lender telling you how much you can afford to purchase. Now, you might be watching this going, Jeb, what are you talking about? Well, what I often see is somebody goes to a lender to get pre-qualified to buy a home. And they go through the process and the lender says, well, this is how much you can qualify for based on your debt, your income. And then that buyer goes out and starts shopping for homes. And maybe they're at the top end of that budget. So let's say, for example, in this video, you're pre-approved to buy a $350,000 home. You take the lender at face value and say, okay, I'm pre-approved for $350,000. You start shopping for homes at $350,000. Maybe you find one, you put an offer in, you close on the property, and then you realize that you never set a budget prior to having that conversation with the lender. Now, what do I mean? Well, a lender qualifies you off your gross monthly income. That's before any taxes are actually taken into account, and they're only using liabilities that show up on your credit report, things like car payments, credit cards, student loans. They're not factoring in how much you pay for groceries, how much you pay for gas, how much you pay for childcare, how much you pay going out to eat dinner, all of those things. And without a budget, you might not know how much you're actually actually spending on those things. And some lenders can qualify you up to 57% of your income to buy a home. And again, that's before any taxes are taken out. So you could end up buying a house and be completely strapped based on available cash flow because you didn't set up the budget properly. So instead of letting a lender tell you how much you can afford to purchase, go into that process knowing how much you can afford to spend on a mortgage so that you're not setting yourself up for failure. The next slide that I'm hearing a lot right now is the idea that you should marry the house and date the rate. Now, what does that actually mean? That means people say that you should find the house that you absolutely love and not really worry about the interest rate because interest rates are going to come down in the future. So you're marrying the house, you're dating the rate, and once the rate comes back down, you can marry the rate as well. And while it's great for marketing purposes and PR and all of those things, and I do believe the idea that interest rates could be lower in the future is real, I don't think you should go into the process with the expectation that interest rates are absolutely going to drop, because what I'm seeing at the moment is a lot of people buying homes, stretching what they can actually afford to purchase with the idea that when interest rates go back down, I'm going to be able to refinance, take advantage of that lower interest rate. Could that happen? Absolutely. Could it backfire? Absolutely. What if interest rates go down, but at that time property values have also declined a little bit, and maybe you don't have the equity in your property that you once had, and now you're not in a position to take advantage of that better rate. Now, again, I will say that I think interest rates are going to pull back in the future, but just like we said, a lie earlier was that real estate only goes up in value. Well, there's also a lie out there that interest rates always move lower. Yes, in theory, you do see rates fluctuate, but you should only be buying a house in this market if you're completely comfortable with the current monthly payment. If nothing happened, if interest rates didn't pull back at all and stayed the same, you would be 100% okay with that current monthly payment. Also, one last lie tied around mortgages when it comes to buying a house, and that's that every single dollar you should have should go towards a down payment. There's also a myth out there that you need a 20% down payment to buy a home, and that's simply not true. You can actually buy a home with just as little as 3.5% down. At the same time, there's a myth that you can buy a house with no money down, that people are just going to give you money. Also, more or less a lie. Yes, there are some programs, USDA and VA, that allow you to purchase with no money down, but typically speaking, you're going to need money for a down payment. But the lie surrounding that every dollar should go down towards your down payment isn't always true. Sometimes it makes more sense to take some of that down payment and pay down your monthly debt, things like credit cards and car payments, because not only can it improve your credit score and in turn give you a better interest rate, it could end up lowering your overall monthly payments by paying that down. So just make sure you're working with a mortgage professional, someone that understands the business, an expert, if you will, so that you can avoid any of the lies that we talked about in today's video. And if you need a mortgage professional, do me a favor, check the link in the description. I'm happy to refer you to somebody I know, like, and trust. The last two lies that I'm going to talk about in today's video are two things that I'm hearing a lot about at the moment. And the first one surrounds the idea of house hacking. This idea that you can buy a house and rent it out immediately, or that you can live in a house and rent out some rooms, or that you can buy a house and turn it into an Airbnb and then buy another house and continue doing that. Yes, that strategy can work, but a lot of the premise around that idea at the moment, that's flooding the internet, is that this is super easy to do and that anyone can go out and use an FHA loan and buy units and live in one and rent the other 3 out, and then, a year later rent that one out and buy another 4 unit. And yes, again, it can happen, but quite frankly, it's a lot more difficult to do than most people think it is. And working with a mortgage professional, like I mentioned a moment ago, they can run the numbers for you and see if it actually makes sense. Now, the last lie I want to talk about in today's video is the idea that, if your house doesn't work out or whatever, that you can sell it at any time. So that you should buy a house and in the next couple of years, sell that property, buy another, whatever the idea is around selling property. And because homes have appreciated nearly 40%, which is well above that long-term trend of 4.6% that we mentioned earlier, and now interest rates have nearly doubled since the beginning of the year, housing affordability has become more and more of a problem. So with that said, I expect housing prices to not really gain much appreciation over the next couple of years. In fact, they might move down in some markets, which means if you buy a house with the idea that you're going to sell it in a couple of years, make a bunch of money, and then buy another one, you could end up hurting yourself. So just make sure you're buying for the right reasons and understand when it comes to selling a property, there are costs involved. And if the market pulls back and your home value has gone down, you could end up being underwater. So that's one reason I often stress, buy for the long term, make sure you have money in the bank, and make sure you're 100% comfortable with that monthly payment. But if you're looking to buy a house in 2023 and want to know exactly how to accomplish it, do me a favor and check out this video here.